Well, if we are worried about what's going on in China, we had a funny way of showing it today, at least thus far. The Dow up 132 points after the Shanghai index there continued to swoon a little bit. Connell, McShane, and Wayne Rogers joining me on this bubble that appears to be bursting. A lot of people, Connell, are saying it's very similar to the NASDAQ in 2000.
And I have my chart of the day nominee to show you in a second. I know you love your charts. This has nothing to do with commodities or whatever.
Did you say commodities or commodities?
Whatever we've been introducing on the program lately.
Sure.
But first of all, what is happening there does affect us here. Even at the end of the day today, it's kind of interesting. China was actually down 5% plus at one point today and finished lower by 1.7%. So it's stabilized, and now we're doing well today. Yesterday was a disaster in China. We were down. Now, it does look almost identical to what happened here when the NASDAQ bubble burst. That's the Cavuto coast-to-coast chart of the day nominee. When the NASDAQ bubble burst...
this is right now showing is that
1999 to 2000.
So now we're going back in time.
Hold on. No, give it time, Neil. This chart that we're about to show here. Now, look at this.
Well, you tease us, but now I'm looking at the...
I'm looking at the corner of my eye.
Oh, boy.
No monitor.
There we go.
What did I tell you? NASDAQ bubble bursting back in the day. 99, 2000, Chinese stock market crashing in the present day. That's almost an exact replica. So what is happening there has already happened here. And what's happening there now...
Who's leading home?
Well, now they're leading us to the extent that there are more and more people concerned about the word contagion. And they say, well, if China catches... I was going to say a cold, but maybe pneumonia in this case, and spreads it to the rest of the world, that's the trigger that starts something bad in other parts of the world, i.e. 1998, Asia spreading to other parts of the world.
Run up before the rundown. You know, Wayne, you have been of the opinion that governments can't fix this sort of thing any more than our government could after the meltdown, because you artificially prop things up, and the Chinese are controlling their markets. No matter how much money they throw at it, they might delay a contagion, but they can't stop it. Right?
I don't think anyone can stop a contagion when it starts. When you have a panic, there's no way to stop it. I mean, we know that from the 30s in this country and any other kind of sell-off. But I don't think it's going to be as bad as everybody else seems to think, that the Chinese are going to correct this.
I mean, they're going to correct it. The problem is any intervention, but how are they going to correct it? How are they going to correct it? They'd have to intervene.
They have to deleverage it. That's all. And in the deleveraging of that's going to be painful, but that's the only way they can do it.
All right, what does that mean? When he says deleverage, what's the idea?
That means you got to pay off. If you borrowed all of this money to buy the stocks, and the stocks go down, and you don't have the value there to cash in, you're going to have to borrow the money. You're going to have to put money into the economy in order to do that. That's what they'll have to do.
Yeah, it does sound familiar. I mean, but to forbid short selling, to punish executives who sell shares of stock in which they own 5% more of the company, you can't force that issue.
They've tried to. I mean, they've tried just about everything in terms of government involvement at this point. I think the larger question for China is, even if their market, and I know it's already gone down a lot, continues to swoon, to use a word that nobody ever uses except in financial market television, if that continues, does it necessarily mean that it spreads? I mean, I think there's another school of thought that says we can kind of sidestep it to some degree, that our economy can continue to grow and our stock market can stay stable even if China continues to crash. So
what I worry about is this reliance on the government to fix it, Wayne.
Yeah.
I know that's not directly what you're saying, but the idea the government's going to have a crucial role in either deleveraging this market, getting traders off the government fix, much as we've tried to do here with slowly introducing the prospect of higher interest rates in this country. Easier said than done, right?
Much easier said than done, but the banks have got to cooperate with them. That's the only way it can get done.
Well, in China, they force the issue.
It's not a
volunteer system here.
No, cooperation is not a choice. Not much is a choice.
Guys, thank you both very, very much.